That's right, guys. You want to know why the crypto crash happened, what exactly happened, okay? Not just some speculation that you see on the internet. I have been doing a lot of research to come up with exactly what happened. And as well, you want to know how to protect from these things by using trading strategies. And that is why you're here today. So today we're gonna talk about, and you're gonna see my colleague very soon, yes, but we're gonna talk about this chart where I've put all the events, the relevant events on the chart, and you're going to see exactly what happened when and who is to blame. All right, that's very important. And as well, I'm going to show you how to use trading strategies that will protect your portfolio from crazy stuff like the crash we had on the 10th of October, like for example, selling before the crash. Yes, that is a good idea. I'm going to show you how my strategy performs, also how the Gaussian channel strategy performed for my entire community. I'm very excited about that because my whole point of running this channel is to help you guys, right? And I know I'm not live a lot, yes, but I want to start being live more because I want to comment on recent events, okay? And so today we're going to talk about the crash. We're going to talk about trading strategies and how they actually protected my community. And they're very happy about that. Yes, I know that from Telegram. And we're also going to have time for Q&A. The live stream should be, well, not too long. Let me see if I can manage. And in order to achieve that, to answer all your questions and not go into crazy, unnecessary details, yes, I have invited with me today my colleague, Steven, and my friend as well. Steven, welcome to this live stream. Please introduce yourself.
Thanks, Michael. Excited to be here with you. So glad we connected a year ago, and you really helped me free up so much of my time trying to figure out all this crypto stuff. And so just to be clear for those out there, I'm not a developer. I'm not a crypto expert. Just a guy invested in crypto who is tired of seeing all these crypto gurus making big promises with zero proof, and so when I met Michael, or when I found him, I felt a huge relief. And because when you listen to him, it's not just marketing hype. He's giving you facts. He's giving you data. And that's what I really appreciate. And that's why I pay attention to him. So my job today is very simple. When Michael starts going too deep into his technical wizardry stuff, I'm going to stop him. I'm going to ask him to clarify and make it simple. And also, if you have any questions, drop them in the YouTube comment section, and I'll make sure Michael answers them as simply as possible.
Right. So the thing is though, guys, right? So I'm a bit of a nerdy guy, to be honest. So when I record videos in the background, I can cut them and cut out all the blah that I usually say, yeah? But on live stream, that's not so easy. So I invited Steven to keep me on track and to take all of your questions and relate it to me. So make sure to go to the freaking chat, post your questions. He will take them and bring them up, okay? But let's get started now with this first section of the video and of the live stream. And I want to talk to you about this chart. I know it looks madness, but it's actually really important to show you all of this stuff. So here, what you have here, okay? So you have the USDE Tether US 5-minute chart from Binance, right? Because, well, the reason why I'm showing you that is simply because there is a lot of rumors out there that Binance caused the crash. Okay, let's see, right, if that's the case. And so I put all the events that you can think of on the chart that are important. We have this whale that was buying on, or not buying, but actually going short on Hyperliquid. And I have that as well, by the way. So I have here the tracker for his portfolio where this whale went short. This whale actually was minus 4 million. Like, that's not good, yeah? Minus 4 million PNL. Well, before he then went up to plus 92 million in profit. Yeah, awesome, yeah. But some people said that this whale knew something, and I want to talk about that. Then we have the Trump post. And by the way, these events happen exactly when the text starts, because there was no other way to do it, right? So this event happens here, right? This event happens here. And then we also have the market makers removing liquidity from the markets, right? From the order book, which is not awesome, right? So we're going to look at that as well. And so the bars that you see here on the chart are simply the USDE Tether US. And the reason for that, why that's the main chart over here, is because a lot of people said, look, Binance caused the crash by having this technical issue, okay? Having this technical issue where there was a depeg of the stable coin that they're tracking. And the reason for that is because Binance has changed the way that they actually track or like represent this number, right? This USDE price. And the way they did it before was they looked at multiple sources, but now, so they changed it to look at only their own source, their own exchange data. Okay, and that, if that is wrong for technical reasons or for manipulatory reasons, like if somebody dumps a lot of this coin or this stable coin, right, on the market to change it to another coin like USDT, then there could be a flash crash on that coin, but it can recover quickly, right? But the problem is that if all the other coins on the exchange, or many other coins like Ethereum or BNB or Solana or so, they get repriced based on that coin that just has a flash crash, it can trigger a cascade. Okay, yeah, whatever. But that thing, the question is, did that really trigger the cascade? Or was it Trump? Or was it the whale? Or was it the market makers? Or something else entirely? All right, so that's basically what I want to show you. And this yellow line, or orange line should be, is the Bitcoin price, right? So you can see exactly when the crash started on Bitcoin. And I will show you as well Avalanche and XRP, because, well, those might have behaved differently. We're going to check it, right? And so the first thing I want to start with, unless I'm already going too much into detail, yes, Stephen will tell me. But the first thing I want to start is this depeg, right? Because you find so many people on Twitter and on YouTube saying that that kind of somehow Binance triggered the whole thing because of the technical error. But you can already see, if you really look at this chart, that Bitcoin already started crashing, say, from here, basically from the Trump post onwards, because the stock market crashed as well, by the way. And the crash was already going quite strongly before the depeg even happened, right? So if I put my line over here, right? So this was like 5 minutes before this, right? So like, no, Binance didn't cause the crash, okay, to be clear. And you can see that that was already way on the way before that, okay? And the same is true for like Avalanche. If I put the curve here, you can see that Avalanche crashed way like 15, 20 minutes before that. So that's definitely not the trigger. So if you hear anyone, and today I watched a lot of YouTube videos to prepare for today, right? And a lot of people are like, yeah, Binance is so evil. Oh my God, there was some conspiracy, but I don't see it in the chart, right? So you can see XRP, the black line as well. It crashed dramatically before that. But sure, like when the actual depeg, you see the red candle there happened, yeah, sure, that was the bottom, yeah. But you can also see, which is very interesting, and let me draw it like this. You can see that the actual bottom of the depeg was already the recovery of the assets, right? Like it already recovered. I mean, not perfectly, but better than here, yeah. So there was already a recovery happening while the depeg of this coin was at its worst. So, well, that means for me that Binance is not even close to triggering this issue. And then I know, right? So I have here a diagram. I know that some people said, yeah, but Binance, where is it here, right? Binance said that they will reimburse people 280 million or whatever of, you know, that got hit by unfair liquidations, which of course, you know, and that makes sense, right? Because if Binance did liquidate people based on this depeg, then they should pay back, right? But as you can see, the market crashed before that, which is also what they said. Yeah, so I'm just saying, so this is huge misinformation in the market. So let me turn that off. And then there is another thing that I want to complain about, which is that a lot of people say that, yeah, but this coin depegged only on Binance, okay? And that's why Binance is evil. I'm like, yeah, cool. So let's actually put the same coin from different exchanges on the chart, all right? And see what happens. So this one is from Bybit. Okay, so you can see that. So it's a line, okay? Because let me turn off Bitcoin. So the black line is the Bybit one for the same coin, okay? So you can see that it actually depegged afterwards. So you could say, yeah, sure, like Binance triggered this, but that makes sense, right? Because if they had a technical issue, which they had, yeah, then of course it happens first on Binance and then on the other guys. But what I hear on the internet is that this stablecoin was stable on all the other exchanges, pretty much, but it only crashed on Bitcoin, and that is just false. Okay. And by the way, all of this is details because I want to give you, my take on why this crashed, but I will tell you later on how the strategies played all of this without you needing to know any of this. But I think it's important to understand how the market works. If we add here like the same asset like USDE Tether from BitGet, you can see the blue line or the turquoise line also crashed after, like had the bottom after the Binance one, right? It's a bit slower, but fine, that's okay, right? Gate.io, I can add more and more. You can see that they all happened after Binance, or pretty much close to that. But what is funny, well, very interesting, which I didn't yet figure out why that's the case. You can see this line is Kraken, and this started crashing the first line. Like I tried all the exchanges. Kraken somehow knew something, or some people on Kraken knew something. So that is very interesting, right? So this line that I just added on the chart here, you can see that it goes down the first and then goes down very sharply. And then all the other exchanges and even Binance itself starts to have the depeg on this asset, right? Like that's very interesting. So if there was any kind of conspiracy, Kraken has been part of it. It doesn't mean that they as a business have been part of it, but somebody that trades on Kraken, okay? So that is interesting. And that's why I'm saying, like, just put it on the chart. You will see the whole thing, okay? So
Michael, really quick.
Yeah.
When you're talking
Go
about
ahead.
these lines here, can you clarify exactly what it actually means when you're pointing these out?
Yeah. These lines are basically the price of the same asset, but on different exchanges, right? So that's it, right? So this one is from Bybit, BitGet, Gate, Kraken, so that we can see how they how the price drop was propagating through the exchanges, and you can see that Kraken was first, funny enough, and then Binance, and then everyone else, right? And that is fascinating. Yeah. So you see, like this was Kraken, which is crazy because it happened already here, right? And then it went very fast. This was Binance, and this was I think this was Bybit, right? And everything else happened afterwards, right? So it was Kraken first, right? I can't even draw here because so it was because of the magnet, I think, right? So it was Kraken first, then it was Binance, then was Bybit, and then everyone else. And
so
that is
changes,
very interesting.
Yeah, that changes the whole narrative though, because people are saying that Binance was the first one who cascaded all of this, mainly because of the USDE being depegged.
Yeah.
Isn't that right?
Yeah. So a lot of people hate on Binance because they say they caused this, but exactly. So let's zoom out. So thanks for the question. Yeah, because let's turn off all of this, guys, because I already proved to you that Kraken was first. So we need to investigate further, by the way. Yeah. But check this out, right? So you have this situation over here. Let me see. Is this still? Let me. I have to make sure that this is auto scaling, because otherwise the chart looks ugly, right? So let me. Okay, so basically, I want to show you one more thing, right? Because this yellow line that I put here, which is actually it's called a ray. So this yellow ray here, I put it here. I put it here because I wanted to basically show you how low this depeg has to go so that it becomes significant, right? So you can see the price of this asset was mostly flat, and then it went very sharply down. But the question is it already a depeg here or whatever? So what I just simply did, right? I went to the right side and let me try to see which one do I have to adjust so that I can get the chart that I need. Wait, give me a second. Interesting. None of them. This one. My bad. Okay. So here's the thing, right? So this stablecoin USDE, it was already crashing in the past, right? It's not like a completely new thing that it had this kind of event. And actually, I don't know why, but I don't like this chart right now. Okay, so here's the thing, right? So this stablecoin had already had a couple of issues in the past. And if I go way to the left, you can see here, and I will zoom in. I'll try to zoom in, right? You can see here, it was already like depegging for a while, not long. Yeah, this is a 5-minute chart. Yeah, so every candle is 5 minutes. So I put this line below this largest crash it had in the past, right? So say, okay, if it goes even further than that, it's not good, right? And that's why this line is there. So if we go way back to where I showed you before, then what you can see is that, yeah, if I manage to zoom properly, what you can see is that this candle here, it crashed clearly through that line, right? So that was a proper depeg, okay? So that's why that line is there. So as you can see, right, as well, here, and why is it not logarithmic still? As you can see, as you can see, I'm not good at managing so many charts at the same time, because it's also crazy, by the way, to have so many overlays, but you know, as you can see, we have here the whale, basically, I don't have Bitcoin here, and that's the problem. So the whale on Hyperliquid, which I'm sure you know about because you watched some videos, yeah? So the whale on Hyperliquid started shorting Bitcoin around this time here, okay? And you can see that, because I can share the links, right? You can see that on Hyperliquid, this is the address of that account. This is the one that made huge money with the short on this entire fuck up. It was first like he was shorting, or he or she was shorting, and then it was actually not a profitable trade, okay? Because you can see that even, right? If you short here, roughly there, it's where this account shorted. I know it's not best time, but that's what it did, right? And if you short here and then the price goes up, of course you are negative, right? You lose money, okay? But then it started to go in favor of this account, and that's what you see here as well, right? It started to go in favor to make money, okay? And so the whale, like people say, yeah, but the whale knew something, right? The whale, oh my god, you know, like the whale was somehow insider or whatever, yeah. But I don't really think so, and the reason is because check this out: the whale bought or sold, shorted here, and that was on the 9th of October, which is one day before. All right, like sure, you can have conspiracies everywhere, but this whale was definitely not a smoking gun, right? The smoking gun, though, was when the whale increased the short around here after the Trump post, which makes sense. Like if you really put so much money in there, you would watch your position and you'd be like, fine, Trump posted something that could help my position to make even more money. So that will increase the position. It was like, I think it was like 400 million, and then it went up to, or 470, and then it went up to like 700, okay? With this increase of the short, okay? But that was pretty much, so that was after the Trump post. Trump post, whale increases short, okay? But that's not a conspiracy, like that's normal. Like, of course you would do that, right? If you see that it's even better for you. So then, of course, that whale made a lot of money, right? Because where is it here, right? The price crashed, Bitcoin price crashed quite dramatically. And then if he would have cashed out here or here, obviously, that would be great, right? And that's what happened, okay? And it's not like, you can clearly see, by the way, that this whole depeg with Binance has nothing to do with it. So now you can say, okay, but the whale is to blame, but not really. Like the whale was there a day before. Like it's not like Trump planned to post something about China. I mean, you can argue, obviously, but I don't think so as well, right? But so basically, that's how I see it, and I will tell you my opinion on what actually happened, but and why this was so dramatic. But I don't think that it was like a conspiracy or some kind of attack or anything like that. Because I mean, if the attack was okay, if the attack was planned on Binance to depeg this thing, then they would have planned it so far ahead and just waited for the perfect moment to do it when, you know, there was some kind of negative news. But really, this China thing was the negative news. We already had China tariffs. Yeah, it's not like it's a new thing. So I'm not a fan of this conspiracy theory that it's Trump or it's like a proper attack or anything like that. I mean, people, they love conspiracies, but I like data, okay? So for me, this was a very unfortunate chain of events. Yeah, go ahead.
Just to clarify, because when I was taking a look at the news, people were saying that this whale bought 30 minutes before Trump announced all of this. Is that just false news?
Yeah, like pretty much, because the whale, so let me go back here. Where was this thing? So the whale, let me try to, like, yeah.
Got it. And this is based on when you take a
So
look at
this is
his address and seeing when he's actually doing the trades.
yeah, and yeah, you find this
Okay.
on Twitter. I have the links to all of this here. So there is something called Arkham. You guys might know Arkham, right? So they are tracking how addresses play on the, like how they send money between each other and to exchanges and how they trade and stuff. So here, this was on the 9th. Actually, I can zoom in here, right? On the 9th of October. This is my time in Dubai, but it's fine. It's just to be relatable. And my chart is also Dubai time, by the way. So it's all relatable. And so here on the 9th of like about 9 p.m. roughly, this was posted, and I also checked it on chain, by the way. And this whale started shorting 420 million of Bitcoin. And of course, this whale looked like an idiot, you know, because there was no news yet. Okay, nothing happened yet. It was like, what are you doing? You know? And then one day later, on the 10th, about 24 hours later, really, the whale increased the position to 700 million, and that was after Trump's post. Okay, so that's why, like, yeah, people talk about this because it's so close to the Trump post, right? But they forget that this whale was already underwater, minus 4 million, right? Because the price went up instead of down for 24 hours, mate. Okay, so like that's not like, try to be 4 million down and be relaxed. Like, I don't know if that's insider information, okay, to be honest. But okay, so this
Quick
is what
question
people
for you.
talk about, but they forget this. Yeah.
This from the audience. VD was asking if Binance in some ways owns other major exchanges. He saw that somewhere on YouTube, and he wants to see if you know anything about that.
Wow, that's an interesting question. I know that they have Apex Exchange, but that's just what I know. Yeah, so they have Apex. It's pretty cool, actually, an on-chain exchange, and they are the biggest investor in this. And yeah, like, no, sorry, this is the wrong one. This is from Bybit. Haha, my bad. No, they have Aster.
Aster, yeah.
So,
okay.
Yeah, not like they. It's kind of, when I say they, I mean like CZ, the former CEO of Binance and still the shareholder. He's pushing Aster, right? So Aster is something where I would say Binance has a lot of influence. I would say, simply because CZ is such a personality. So I confused the two exchanges starting with A. Aster, by the way, everyone got screwed over there. I mean, because the thing, not because the exchange is bad or anything, but Aster allows people to go 1000x, like you can see that here. So they allow you to go to use unbelievable leverage, you know, that is not healthy. Okay, so you can go 1001x, and it's even called degen. Funny, you can see here, right? Degen. So if I go above what? If I go above 200,
go to 1000, see what it's named.
No, it's still degen.
Yeah? Ultimate degen.
But mate, like, let me explain to you one thing, okay? If the price of an asset goes down 50%, like, okay, let me go to the next chart, like to a normal chart, so to explain to you what the hell is happening. So this is AVAX, right? Because it crashed a lot, and it's good to show, you know. So let's say you are in a long position because it was bullish, and the market was looking okay, yeah. And let's say you went long anywhere, doesn't matter, before the crash, really, and then it goes down 50%. So here it went down 50. And more than that, but it went down 50. If you have 2x leverage at this particular point in time, you lose all your money. Okay, right? Because if you do 2x, it means that if it crashes 50, you have to multiply 50 with 2x, and that's 100%. You lose everything. All right.
Yeah.
But yeah, so everyone who thought, oh, I go 2x leverage is okay, yeah, because it's not that bad, you know, like it should be safe, but you're still screwed because look at this shit, right? And then it went down even more, even if you had 3x leverage, which a friend of mine actually that I met in Singapore, sadly, man, like this guy, I'm so pissed that he lost his money because he didn't use my strategies, right? He should have. he went 3x and he got fucked, right? Like because like these assets went down 70%, went down like go to XRP,
insane. Mate. That's absolutely insane.
Like, look at this, mate. Like this went down roughly, okay, 72 as well. Yeah, I mean, you can't survive this, and then you go on Aster and you do anything above 2x, you lose all your money. Like, of course, people are hurting, right? Like if anyone, so that's why I'm saying leverage is risky and you should avoid it. And I understand why some people play the game. I get it, but you can see what can happen. And yeah, if you didn't use any leverage, let's say you were on the spot market and you had zero leverage, then you didn't lose much, right? Because if you think about it, right, XRP, just here because I'm already there. Okay, yeah, it went down from, let's say, here to here. So you lost 13%, but that's fine. Who cares? 30% is a normal day in crypto.
70, 80%.
Yeah. But if you use any leverage, 2x or more, you lost everything. And recovering from that is impossible, like because you don't have any money, right? But if you lose 13 and you still have some money, you can multiply it in the future, right? And so that is the problem, and that's why I'm always saying leverage is it's a bitch, because this shit can happen, right? Of course, in the normal traditional stock market, it's not that, like, they have a lot of circuit breakers and stuff, but in crypto everything is free. We want it to be free, right? We want it to be liberal and everyone can do everything they want. Okay, there you go. Yeah, you have this. And so I'm very sad, you know, a lot of people lost a lot of money. And I want to just explain to you that this, I don't see this as a conspiracy or any kind of attack or anything like that. But what made it really, really bad, okay, and this is the last thing I want to talk to you about when it comes to the crash, and then I want to go to the strategies, okay? So what made it really, really bad, and this is something I've never experienced before personally, is that market makers started to withdraw liquidity from the order books here. And look at this Bitcoin crash after that, right? Because I can explain, and I will explain what that means. But basically, a market maker goes to, like, maybe we can see that here even. Is there an order book somewhere? They don't even show the order book. Anyway, so there is this order book where you have bid and ask, you know, like, and it's green and red and it's flashing, right? So those are people who want to buy and who want to sell, and they have to match. Because if I want to sell at 200,000 Bitcoin, but nobody wants to buy that, then we're never gonna do business, right? Like, it's never gonna move. And so basically, let me try to draw it here. So if I want to sell here and somebody wanna I want to sell here and somebody want to buy here, then there is a huge gap, you know, between us, and we have to negotiate this. But because it's all online and it's all automatic, there is no negotiation happening. It's not like I'm talking to the guy trying to convince him, you know, like, you know. So that's why there needs to be some kind of mechanism to make the deal between us, to bring us together somehow. And if the gap is too large, it's not going to happen, yeah? But if the gap is smaller, then the market makers can actually add orders in between with their own money, and then they can be part of the game, of course, with an algorithm to ultimately produce money for them, right? So they could basically say, fuck it, I will buy this, I will sell it to this guy, but then I will drive the price up to sell it even higher afterwards, or whatever the algorithm does. It's high frequency trading, okay? And so if market makers don't add these orders in between, because they have huge liquidity, okay? That's why they're there, to actually stabilize the order book, and they add all these orders in between. So if somebody wants to sell, then maybe the price drops to here because it goes through all these orders, fill the order, all these orders disappear from the books. But fine, right? It's not going down here, right? It's not crashing. But if the market maker actually doesn't add these orders, and you have only a couple of orders from normal people, and you sell, boom, the price goes until it has to work its way through the order book, right? When you sell, it has to match with these orders, especially if you do market, it goes boom. And if there are if there are gaps in the order book, the crash is very fast, right? And that's exactly what happened. And that is what really led to the massive crashes I showed you before on the altcoins. And then you can actually see that very nicely on this chart, which I found on Twitter, where you can see, so this is from an order book from a market maker, and you can see the market maker simply just removed their orders, and they just stopped playing, you know. And this is like falling without the parachute, you know what I mean? Like, it's madness. And then they increased the orders again, but like they started participating in the market again. But for the market maker, it was too volatile to be part of this, because they also can lose money, right? So they're just a normal participant with special access, obviously, to the exchange and with a lot of money. So this was what actually liquidated people, okay? Because this is the DPEG of the asset, but this And that happened afterwards, right? This is the Binance stuff, right? The candles is the Binance issue, but you can clearly see that the Binance issue happened way after everyone lost their money, right? Like, yeah. So I think I hope it makes sense. Yeah.
So that is something I definitely want to dive in deeper, especially on another episode, because I think there's so much to unpack there. But I'm very curious, through this crazy, flash crash, how did the strategies that you've created perform?
Yeah. So this is Steven bringing me back to the topic. Yeah. Okay, great. So I want to show you first the. Let's actually go to Bitcoin and like turn on the Gaussian channel. The Gaussian channel strategy. If you are new around here, I'm talking about this all the time because it's a strategy I've created. Everyone can use. You go to signum.money, signum.money. Okay, whatever. And then here you have the strategy. And you can get yourself access and whatever. You can use it. There is a video on how to use it. And a lot of people are using this strategy in my community. And that's why I wanna check how, like, let's say you've been using this, right? How did it help you? Okay. I already made a video about that this is a profitable strategy, blah, blah, blah. Not financial advice, right? Check yourself. You will see on the chart. And so you can basically just add it on the chart like I did here. So I have it here in the indicators. You can do the same, right? So Gaussian channel, you put it there, right? And then you see what I see. Okay, so those are the default settings. Now on Bitcoin, you can see that, well, the crash was so fast that it didn't really protect you a lot. And I know this is not starting great, yeah? But bear with me, you will see how important the next stuff is. So on Bitcoin, it's sold here. Yeah, I mean, first of all, let me say one other thing. If you had a stop loss, you lost a lot of money because your stop loss would have been here. And this is why the price went there, yeah, because it liquidated everyone. So if you had a stop loss, you lost even more money, right? Because your stop loss triggered at -13, while as this triggered at minus, actually it was buying here, right? At -4, right? You see what I mean? So stop losses can be very risky. I know I should explain this longer. I can do it later. So this is Bitcoin, right? So this, I would say, yeah, like whatever. Yeah, it didn't really help you. But check Ethereum, right? So Ethereum sold here. Don't care. Like this is the crash. I don't care. Like my portfolio protected. Fine. I'm good. Yeah. Let's go to the next. Actually, let's leave this open. This panel here. BNB. It bought here and it's still invested. I mean, there's nothing happened. I mean, really, BNB, you're in profit here. Like what? You're in profit 72%, mate. I mean, what else do you want? By the way, the coins that I show you here are the top 10 coins based on market cap. So those are not random coins. Those are the top 10 coins. Okay, XRP next. So XRP sold with this strategy here, right? So you see that was the last trade here, right? And then don't care. Like, see, protection. If you follow this, instead of having FOMO, like, oh my God, I need to buy. Like, if you bought manually, you got screwed. Yeah. So that's why you need to follow strategy. Solana, I mean, didn't really crash that much, Solana, right? But still, it sold here before the crash. Good. Yeah. Whoever used that was protected. Dogecoin sold here before the crash. TRX, the whole story. Yeah. All the same. Sold pretty long ago, actually. Long time ago. It sold here on 20 September. That's some time ago. This is a one-day chart. And again, it protected. But as you can see, and I want to talk about this, some of these coins didn't really crash that much, but I will show you that in a minute. Cardano, ADA sold here, protected from the crash. Hype sold here. You see what I'm saying? Like if that's not obvious that you should follow this or some similar strategy, I don't know what else to say, guys, but I'm here to help you. So I want to tell you a story, and let me come like this because this story was quite cool. Like I was flying from my home country to Dubai with my wife, okay, because she's moving to Dubai. Long story, I went there to pack the house. It's a pain in the ass. Moving houses from one country to another is a huge topic, but yeah. On the airport, okay, we were there to drink a coffee before the flight, have something, whatever, some small stuff. And we went to the counter to order, okay. The guy, the waiter, he recognized me. I mean, okay, I was also running around like this, yeah. But anyway, he recognized me. Also, it says here, Michael Automates, and he said, "You're Michael, right? I know your channel." I'm like, "What? That's crazy, you know?" And the guy said, "Oh my God, you saved me! You saved me so much because first of all, he used another system and he lost all his money, and he made 50-50, the other system and my system. So first of all, the other system lost all his money, most likely because there was leverage involved. Like I tell you, leverage is risky." And then he said, "Look, you made me money, but you also protected me from losing the whole thing recently in the crash." I'm like, "Oh my God, that's so awesome." Of course, I made a photo with the guy, you know, it's funny, yeah. But this is super cool, right? Like, this is why I'm doing this, because I want to help people and I want to share the knowledge. It's not that hard, yeah. It's just follow the strategy, automate it, and that's it. And I was super happy. My wife was like, "Oh my God, people recognize you. That's crazy," you know. And so the last part of it is that he was super nice. He obviously invited us to food. He gave us some fruits and another like Coke and whatever to take into the airplane. You know, he was just a nice guy. Okay, so so that is the consequence of doing what I do and helping people, and I'm really happy about it, right? So this is how the strategies worked out. Now, keep in mind that all of this is fully automatic, okay? So if you're following what I'm saying on my freaking channel, which is called Michael Automates, then all of this buying and selling happens fully automatically. If you're basically, you know, you create your bot, you connect it to whatever exchange you can use. By the way, we just added OKX on the for US, for the Europe region, and for international. OKX US is cool because it's a cheap exchange, it's easy to use, and yeah, much cheaper than crypto.com or Coinbase or Kraken. Okay, so this is cool. Anyway, so you connect the strategy to your exchange, it trades fully automatically, right? So that's why I don't really understand how people can lose their money if they just follow what I suggest. Not financial advice, but still, I mean, it's logical, right? And that's why also I you know, I have to do good and I have to talk about it, and that's what I'm doing here, so that you guys see that this stuff works. All right. Okay. Do we have any questions? Or I have to show my own strategies, right, as well? Let's see, Steven, anything I should answer?
Do you want to bring those up first, or should we go
into
Q&A?
Yeah, let's do some questions and I will do my strategy afterwards. People can have some suspense, you know, for that.
So Alex on Public, he asked, please explain risks associated with stop loss.
Yeah, okay, cool. So the thing is though, that if you have let me turn this off. If you have a stop loss, often you put it where everyone else is putting it. So for example, like you can relate, if you relate, let me know. Let's say, you know what, let me do it even more interesting for you guys. Let me replay this, and let's say we are back here and this crash didn't happen, okay? And you're in a long position, okay? You are bullish because, you know, I was bullish as well. I'm still bullish, right? And you want to be like, you want to protect your funds, but you don't want to sell too early, right? So you would put your stop loss somewhere here, okay? Because it's below this range and it's like safe. It's far away, you know, like it's fucking far away from there. It's like 12%. Like it's not gonna go there, right? It's not freaking realistic. Yeah. So now you have two issues. You put a stop loss here where everyone is putting it, because this is textbook stop loss level. And the second thing you have is the stop loss is on the exchange, so the market maker knows that it's there because it's, you put it there, right? You said sell at this level. Okay, cool. If more people do this, right, and they accumulate here, the market maker is like, hey, if I liquidate all these people, or if I trigger all of this, I make more money, because market maker gets paid in multiple ways. One of them is executing trades. Okay, so they can make money by buying low, selling high, or you know, or as well they make money for every order they execute because the exchange pays them. Okay, so if there are like millions of orders at the same level, market maker will love to push it there and return, which is exactly what happens. So if you put a stop loss like this, like a beginner, you know, I understand stop loss seems to be a good idea, but what I do is more powerful, and I will tell you why. So now if I play it forward, day by day, boom. So you're out of the market. You now basically, you sold here, but the price closed here. So now you lost a lot of money, right? Because instead of selling higher, you still have lost money, right? But not, you basically lost 5 or 6% more than you should have, because you put the freaking stop loss and it got hit. And yes, I know it was very unrealistic, but it did happen, right? So yes, stop loss is a good idea, but it often gets hunted, right? Like it's called stop loss hunting, where market makers hunt them, and that's why you have this sideways, actually all these sideways patterns, right? They usually happen because people have stop losses here, stop losses here, stop losses here, stop losses here, right? This is how a sideways pattern occurs, because nobody wants to trade. The market maker says, okay, cool, if you don't want to trade, I will move the price here, liquidate, or like trigger all the guys, trigger them here, trigger them there. And then only once people actually put money on the table to push the price up or below the range, well, then yes, then that's true price action. But everything where it's sideways, it's mostly market makers executing this stop losses or take profits, right? If they're on the top, it's called take profit. On the bottom, it's called stop loss. Now, the way to do it better is to have a strategy that detects when to sell. But it doesn't mean it has to have a stop loss that is on the exchange. Everyone can see that, because that's easy to detect and hunt. Instead, it's a trading logic that is built into the strategy to trigger a sell whenever, or a close position whenever it makes sense to do so, right? Instead of putting a fixed level, or even worse, by the way, are like these stop losses. What's the name? Trailing stop losses. They're even worse, right? Because like in this case, it might have helped, but a trailing stop loss can actually cause you, let me see where I find the situation, where you sell early, basically, and then missing out on the uptrend. So that's usually when there is a wick to the downside, and then it stops you out, and then it continues, right? So let me see if I find something like this. I don't know, like Bitcoin is not that bad, no? If you look at it. Yeah, Bitcoin is not that bad, but maybe here, like just as an example, you have a trailing stop loss, it follows, and then here you get stopped out, right? But then the whole thing continues and you're not there anymore, and then you have to enter back in and you don't know when. And so this re-entry is a huge topic. So I'm not a fan of stop losses. I'm more a fan of strategies that have a logic to sell at a logical point in time without a fixed level, right? It's like a mathematical formula that says, okay, now it's over, right? And that is how I play the market, and it's why my stuff works better, because it can get faked into or out of trades much harder, right? So as you see here, there was no need for a stop loss. It just sold here because of logical reasons, and then the whole market crashed. This is Ethereum, right? So you see what I mean? So anyone who had a stop loss, most likely, again, it was maybe even here on the orange line below this local top, they all lost money, right? Because they waited for the thing to actually hit it, then it recovered. So now they're even thinking, should I buy back? What should I do now, right? So stop losses create a huge problem for if you're not like a professional trader. So as a retail, I think it's better to use strategies that you can backtest, right? You see the numbers, you see what you're getting into, you automate it, and then you eliminate all of these emotions. Because imagine what are you doing now? You're buying Ethereum or what? Are you shorting it? Are you longing it? What are you doing, right? You don't even know. Like you need a strategy to tell you, right? Because otherwise you're lost, like everyone is. So I hope I explained it properly, but it's a huge topic, right? So let me know.
All right. Well, thanks for that. We do have a few more questions, but I think we're pretty much running out of time. So
oh yeah, let me say something about that. So by the way, if we don't manage to answer your question for some reason, then come to Telegram. The link should be down below. There is a collection of links, and I think the first one is the Telegram. Okay, it's a huge group. I think 16,000 people. Come there, okay, and ask your question. I will answer it over there if I don't manage today, right? So make sure to join the Telegram right now to not miss out on that. Sorry.
Right.
Go ahead.
And real quick, how are they going to get that Telegram link?
Oh, it's below the video. It should be below the video. You open up the video description, and then there's a bullet point list of links. The first one should be Telegram.
Awesome. Great. Anything else before we close it out?
No, I wanted to show my strategies because so my strategies. The thing is, Right. So, okay, let's go Bitcoin. So I'm honest here, right? So my strategies, they didn't do much better on Bitcoin because both of these strategies actually sold quite low. You can see here, unfortunately, because Bitcoin really, like, it was very bullish. So my strategy didn't do better on Bitcoin in this particular case. But when looking at the total P&L, right, you zoom out the entire thing, you know, like since 2018, yeah, like my strategy made 4,300% profit with 20% max drawdown. Not financial advice, not promising you the same numbers in the future, but just showing you historic numbers. And then when I go to Gaussian, it made like 2,700 with 30%. So yes, in this particular case, my strategy didn't do better, but in the entire time frame, it was. Okay, then Ethereum, we go there. My strategy did actually worse, to be honest, because it sold here, which is very painful. But anyway, I have risk management, putting less money in there. And Gaussian sold much higher, which is great. But again, if you take Gaussian in the entire time frame, it's pretty bad on Ethereum, to be honest. Like 700%, what the hell, there's nothing. If I go to my strategy, 4,000. So yes, it messed up this trade, and I want to be honest to tell you, it messed up this trade. But overall, it's still very, very good on Ethereum. With the 22% drawdown, is ultra good on Ethereum. I mean, Ethereum had huge drops in the past. Look at this, right? Like we had a drawdown of like 80, 90%, 90, and this one has only 22. That's awesome. All the other assets, by the way, going to BNB, it performed pretty much perfectly, right? So it's still invested. It's you know, it's in a trade. It bought here, sold here, bought here, still invested. On XRP. Well, XRP is very hard to trade, but on XRP, let me make this bigger. On XRP, it sold here and also avoided the entire crash. So that's pretty much what you expect, right? Usually. On Solana, it sold up here. Sorry, I have to turn off the other one. Sold up here, and so it avoided the entire crash. So pretty much similar. But the difference is, though, that in total, my strategy made about 48,000% on Solana, which is crazy compared to 13,500. So what I would say to summarize is, this particular crash on Ethereum didn't go that well with my strategy as well. But on every other coin that I have in my portfolio, sold early, love it, didn't have like an issue with the crash. That's why I didn't really post that much about it, because I didn't have like a big loss that I want to share, because there is not much that happened in my portfolio. It should be the same for you guys if you follow a strategy. But I also want to emphasize that one trade doesn't make a strategy. Okay, like even if you have a manual trade and you made a lot of money, it doesn't mean all your trades will be like this. All right. So if it's a good or a bad one, it doesn't really matter. It matters you have to zoom out, right? What you need to do is to actually zoom out and have more than a couple of trades to see the real performance in different situations, right? So how does it behave in the uptrend? Okay, it makes money. How does it behave in the downtrend? Okay, hopefully it doesn't lose my money. Well, no, because it's sold here. This is my strategy. It's sold up there at 212 dollars per Solana, and then it bought back like after huge pain for other people, but not for me, right? So what really matters when you look at a strategy is to see the back test on a longer time frame. Okay, so not just one trade. But why I showed the Gaussian in the beginning, and I know I'm clicking around a bit quickly, but why I showed it is because I wanted to prove the point that I'm helping my community. Because even if you use Gaussian is a great strategy, yeah, you were very well protected, okay, compared to most people who lost their entire portfolio, especially if you traded these coins that had this massive drops, which most had. But because I forgot to mention, some coins didn't have this drop, and I want to show them to you very quickly. Bitcoin, Ethereum, the drop was like moderate, I would say. It's not really, if you zoom out, you wouldn't even notice, right? BNB was, yeah, painful, I would say, okay. But then also you had TRX, and TRX, you don't really see anything. What is this, right? This is the candle we're talking about. You know what I mean? Like, so there were these couple of coins, right? Bitcoin, Ethereum, let's say BNB and TRX, which survived it very well. And I think that's because the market makers did not remove, and I can't prove it today because I don't have access to this particular chart. I had to find it online. But I believe that the market makers did not remove liquidity that much on those coins the way they did for the other ones, right? Oops, wrong chart. So if you go to any other coin, they were destroyed. Look at this Wix, right? Link, like that's crazy. Okay, and Link is not a small coin, right? Like it's a top 10 coin, and it got destroyed. So it was really like which market maker removed liquid, for which coin did they remove it, and for which coin they didn't remove it. And to close the entire thing where we started, I can tell you, I don't think there was a conspiracy or something. The problem was that everything came at the same time, and the market makers got scared and they took out liquidity for some coins because they were afraid that they will lose money themselves. And that's what made the entire move way stronger for most altcoins than it should have been, right? And then the Binance thing, right? So to summarize the whole thing, I don't believe in conspiracy. I don't think there was an attack. It was just a very unfortunate chain of events and market makers taking a step back from the order books, which is horrific. I mean, so yeah, that means, to summarize, okay, you need to have a strategy. And that's why let me come like this, yeah? Look at this, yeah? You need a strategy, okay? You need a freaking strategy, and this is the one with the candlesticks, you see? Bullish and bearish candlesticks. If you like this kind of stuff, I like to have fun, right? So I created some merch. It's below the video. You can check it out. There's also a t-shirt. I should wear it actually. And so you need a strategy. If you have this cap, you will not forget that you need a strategy, and then you would survive this kind of drops. But you would also make money, not financial advice, yeah, not promises, but it's a high probability, let's say, that it would work out for you, because if there is another leg up in the bull market, the strategy will capture it, okay? And so if that's what you care about and you want to actually step up your game, then at least check out SIGNUM. Let me go back to my screen and use the free strategies that we have here, or that I put here, Gaussian channel and Ichimoku. Check them out, put on the chart, do your analysis. For both of the strategies, there are videos explaining how they work and how to use them and how to automate them, and it's really easy, cheesy, right? And if you are really if you want to go super deep and you want to become a master in automation, well, then maybe potentially you want to consider the Auto Trading Masterclass, which has my strategies that performed very well, better than any other strategies that I've seen. You can click on these boxes to check out every single trade they made, but that's for people who really care about their portfolio and want to grow long term. So this is something that I would recommend you at least to check it out, right? And so with all of that, if you have any other questions, then come to Telegram, because I'm there, right? You can ask me anytime. And I see you in the next live stream. The next one I want to do is where I actually take a strategy and improve it live, because I'm a developer, right? With you guys, okay? I code, okay? With AI, everything in real time. You tell me what to do, how to improve it. I add it there, right? So we're going to have an awesome time, because I heard from many people that you love when I build strategies. So let's do it, because I can, yeah? So let's build a strategy together, and let's have some fun. And I see you in Telegram. And I forgot to tell you, if you want to start automating Gaussian channel strategy, then this is the next video you should watch.